Okay, peeps, welcome back. So today we're going to be talking about best times to buy or sell TSLY and other YieldMax funds and what our strategy is on this. Let's get it. So as you guys can see here on the charts, we have TSLY pulled up. The first thing that we're going to point out is basically the support and resistance levels. You have a major macro support level here, a major resistance level here. We have these lines as blue and not red because we do think that at some point this resistance will turn into support and it will eventually come back, retest, and then the price of TSLY will move higher. Once it does, we'll change those to green. If we were super bearish on that resistance, we would have this as a solid red. So in case you guys are wondering what the colors mean, that's what they mean. Now, the other thing I want to point out before I get heavily into this is the different time frames. As you guys can see, TSLY is a relatively new fund, so not a whole lot of history on the weekly. MACD shows a bearish cross. RSI shows a bearish cross, but the price is bouncing. So we're not really going to use this as a valid means of deciding when to buy and sell. We're instead going to go with the daily because there's more information here. As you guys can see on the MACD, at the resistance levels, you have a dump from basically right here. As you guys can see, the RSI was more or less rolling over with the price action. Once we got this last bearish cross, it was pretty much downhill from there. You got the MACD bearish cross. You can see the volume slowly trending down and then moving into the red with the bearish cross. That indicates slowing momentum in the uptrend and a possible reversal. And it did ring true in this case. And again, over here, you can see the rolling over of the MACD and the RSI. That would indicate a possible reversal, which did happen. And we got a double top here, and then boom, price sold off. Now, one other metric I want to point out to you guys that I myself use as a trader, and this is not like a strategy per se, but it's kind of more of an indication of what may happen. We only ever really trade based off of this depending on whether something actually happens to confirm the movement or not. If it's not confirmed, we don't take it heavily into account. We'll just put it like that. So as you guys can see, the RSI is moving down, the MACD is moving down, but the price is moving up. Well, this is called a bearish divergence. Basically, what that means is the price is moving up, but the strength of the move is slowing. And also the MACD convergence divergence is also slowing and reversing. As you guys can see, it went from green to red, green to red. That kind of indicates indecision and a possible reversal. So a bearish divergence basically is an uptrend that gives you some kind of indication between the convergence of the indicators that there might be a reversal coming soon. So this is a few things that you guys can use to determine whether to buy or sell. If you want to look at this from a very basic perspective, we'll just say, okay, we'll basically just, so we're going to go ahead and remove all these so I can show you guys exactly what I'm looking at here. Okay. So if you want to be very basic, and you guys can sign up for TradingView anytime you guys want, you just go look up TradingView, sign up, make an account. So basically what we're looking for here for support and resistance levels is anytime that a level or an area was touched multiple times and it had a major swing high or swing low off of those touches. Okay. So in this case, we got multiple touches right here. Let's actually make this a little bit more straight. So you guys can see we had some gaps here. You have a gap here, a gap here. Usually those gaps get filled, just so you know. You had a gap up. Well, guess what? It got filled on the way down. You had a gap down, got filled on the way up, and had another gap down, and we have not filled it yet. I believe it's some 95 or 98% of all gaps that happen ever in the stock market get filled ultimately, especially on the indices. So at some point, the price, based on the stats on gap fills, at some point the price will come back up and fill this gap. So we're going to draw another line for basically the wick tops here. So what is a price action wick? Well, basically a price action wick is this long little line you see here, which indicates that there was no body close at the top of this resistance. These sellers sold back down, and the close was down here at the bottom of this candle. And the opening price was up here at the top of this body that I have the pointer on right now. So what you're looking at with the wicks is basically wick rejection. This is a double top formation here, which indicates a potential major sell-off. And again, with the price points being touched, we'll basically use as many different price candles as we can to kind of cover this area for a support level. So you got it touched here, all along this area. And then you got another gap there. And we'll use the bottom of this green candle here. Oh, give me a second. So bottom of the green candle here. So this is kind of what you would want to draw on the charts to give you an indication of where to possibly buy and sell. You could also use an area like maybe right here. You see where this gap is over here on the right. It also touched a swing low down here. That would be another great place to potentially maybe dollar cost average into. You could sell up here at these touch points, which also, funny enough, kind of this gap happened around the same area. Now for the RSI and the MACD, basically what you want to look for is you want to look for a golden cross, which is where this blue line crosses above the yellow one to indicate a reversal. As you guys can see here, it pretty much moved up from that point. Or a MACD golden cross, where the bars on the MACD turn from red, light red, into green. And you get a bullish cross below the zero line back to the upside. And for the RSI, oversold territory would be anything at 30 or lower. So this was oversold, indicates a move up. And again, the RSI, basically anything between, well, pretty much a 70 or above would be your overbought territory. And for a selling point, you would basically want to see the MACD be above the zero line, but also have a death cross above the zero line. And basically the bars move back from green to red. So that's kind of how you guys would take a look at the technicals. You know, you got your bearish divergence, you got your support and resistance levels, you got reversal areas, reversal convergence here, where you got a golden cross on basically all three indicators. And then a little bit later on, you had a golden cross on the EMAs. That's also something you could use. It's not perfect. It's not as good as the RSI and the MACD, as you can see, but you know, you get some pretty decent moves off of these golden and death crosses from the EMAs. It does kind of give you a slight advantage on this time frame. So we're going to take a look at another example. We'll go to clip here. As you guys can see, pretty much got the lines drawn in here. You got your support level. So you can buy down here basically between 1750 to 1830. Maybe be looking to sell if you really want to. I would say probably somewhere between this previous support area turned resistance. As you guys can see, it was support here, broke down. Now it came back up and tested and rejected a couple of times. So probably somewhere between 1950 to about 1980 a share. Again, you guys can use these indicators, the RSI and the MACD and the EMAs if you want to. Bullish and bearish divergence, that's something you guys are going to have to learn in your own time. Unfortunately, in this video, we're not going to be going over that. So it may happen a little bit later where we talk about that. But as you guys can see on clip, one of the reasons why we've been buying so heavily into clip is because you have a major bullish divergence going on here, where basically you have months and months of the price action going down, in contrast to both the RSI and the MACD indicator moving up. That's what's known as bullish divergence. Basically, we're looking for the price action to move up from this point. So we'll take another example, one real quick example. We'll take a look at OARC. So OARC is basically in this downward channel. For those of you guys who understand trading, you know that a downward channel is a bullish indication. Typically, the probability of a downward channel breaking out to the upside is higher than it breaking down to the downside. So basically, we're expecting like a move from the support of this downward channel pretty much straight up and out of this channel area. And for those of you guys who are new to technical analysis, you guys can pick up on this stuff over time as we continue to cover more and more of this. But pretty much you'd be looking to buy like a good area if we were to do a mix between both support and resistance and also the downward channel. So you guys can see based on support and based on support here, it didn't quite touch the bottom of the channel. That is because basically it's pretty much in a support area here. If we draw another trend line here, this is kind of an odd one, but as you guys can see, this little line here, it bounced off this line multiple times. A lot of traders do look to trade lines like that as support, so it didn't come down and touch the channel quite exactly, but you still would have got a pretty good price. I mean, basically, if you bought at 1350 to the top of the channel, you would have made about a 23% gain. So there's that, and you basically pretty much got like your, we'll draw this as one really large resistance area here because it's not going to, again, this is not going to be an exact science, but you can more or less gauge in a generalized area what you're going to be looking at. So 1750 all the way up to 20. If you bought near the bottom of this channel all the way up to resistance, talking a 50% gain. If you bought at the top of this channel and you didn't buy anything at all down to the bottom, you would have been down about 35% on your money. But again, it's only a loss if you sell. But you could have DCA'd your way down into this. So what's our strategy? Basically, what we're looking to do is we buy in at whatever price we buy in. Okay, if we're looking to get our share counts equal across the board, we're not concerned about the price that we buy in. Once we get everything equalized, we focus on whether we're going to sell for profit and then DCA back into other positions or not. And but once we get past that point, or we're not at that point, which we usually do that about twice a year, maybe sometimes only once a year, depending on market conditions, we basically at this point are basically looking to get in at any price, preferably lower would be ideal. But if we get in at a higher price, what we do is we basically just DCA down into these positions. Okay. DCA down, DCA down. We're not going to get a perfect bottom most of the time. So we might be like somewhere around here at say 1520 once we're done dollar cost averaging and we move into another position. Even still, if it gets back to the top of that channel, it's a 12% gain, and anywhere between 16 to as much as 33% all the way to the top of the resistance area. So we're going to give you guys a live example here. As you guys can see on Webull, we bought in VDY at the top. Well, why did we do this? Again, once we sell for profit, we basically reposition back in either 95 or 100%, or maybe as little as 90% of our position back into what we originally had. Then we move the profit in a piece of the cost basis into undervalued positions elsewhere, which is why we took some of NVIDIA and we moved that money into OARC, because OARC, as you guys can see, is at a deep discount. So we bought in overvalued on NVIDIA. We did tell you guys that we thought NVIDIA was going to dump, and turns out we were right. It did. So what we're going to be looking to do is we're basically going to be looking to take our clip dividends, and this is one of our strategies, rotating capital in between positions to accrue more dividends and compound growth faster. We're going to take the dividends from clip. We're going to move it back into NVIDIA to lower our cost basis. And then the dividends from NVIDIA, we're going to put back into clip, or perhaps into some other position where we have too high of a cost basis, like Apple, for example. This would be a great one for us to buy. And we could also buy OARC and lower our position on that. So anyways, hope you all enjoyed this video. Please like, comment, and subscribe. This is how you guys can basically strategize on how you want to buy and sell the YieldMax funds and maximize both your profit and your passive income. All right. See y'all later. Peace.